Hey everybody, welcome back. It is good to see you and be with you once again. Today we are going to discuss volume profiles, market profiles, and volume nodes, and what all those have to do with how to be better at spotting what is going on in the market and market structure. Now, for those of you who aren't familiar with these, you may have seen them posted in social media. They're quite common. They are important indicators. I think it depends on your style of trading. But maybe this will change your opinion. Maybe this will make you better at what it is and what you want. So let's go ahead and discuss how we can look at a market's profile. Okay, so on this chart here, we're going to go ahead and start off with the market profile. So this is not something that I think I was trying to figure out how to present this to you, and I don't think I want to do it live. I think we're going to do this static image that was taken earlier today. So let's start with just kind of doing some basic definitions. Market profile, which is sometimes referred to as the time price opportunity, or TPO, is a charting technique that shows where prices have traded over a specific period. And so time is involved. So each TPO block represents a time interval where the market traded at a particular price. And it goes through the alphabet here of the first opening blocks were A, then it was B, C, D, and then we'll get into how it's built. But essentially, you're painting a picture over the course of the day as to how time played out and pricing played out. And there's a couple of different ways that you can use this information, which we'll get into, but let's keep breaking down kind of what it is. So I had this set to 5-minute blocks. Another common setting is 15-minute blocks. So each of these letters is representing a period of time and a price. Also here in this, the white colored boxes there is the point of control. And the point of control is the price where it has the highest number of those TPOs. In other words, where the most trading occurred. Another thing that you'll see over here to the right, this is the volume chart. The volume shows how much was transacted at those places, and you'll see there's a couple of different lines here. There's a red one, a yellow one, and a green one. This yellow one represents the point of control, and you can see that that lines up here with this white line. This red line here is the value area high, and this green line down here is the value area low. What those are, those represent the upper and lower boundaries of the value area, which is typically where 70% of the day's trading activity occurred. I have mine tweaked ever so slightly to 72%, but 70% is usually the common default setting. And so what that means is that between this red line and between this green line, that's about where 70% of the trading took place during that day. Why is that important? Well, because not always, but sometimes, when we get over a value area or below a value area, price wants to come back into its home. It wants to go back where it feels safe, where most people were agreeing that there was a fair value and that there was more activity being traded in that value area. Sticking with the volume profile here for a minute, this is, again, a little bit more of a straightforward concept than the TPO. And this shows the volume of trades executed at each price level over a specific period. So instead of focusing on the time, it's going to focus on the number of shares or contracts that are traded. And so here I actually have a setting, and you can change the settings. Some allow you to do it and some don't. There are different versions of volume profile, and I'm going to show you another one later. But I actually have it overlaid displaying the volume and not just the bars here. So getting into the volume profile a little bit more, again, that's going to focus on the number of shares. The blocks over here on the left, the TPO, are going to focus on the time spent exploring an area. Analogy for this might be to imagine yourself playing a game where you are going to count how many times you bounce a ball at a different place in your yard. The market profile is recording where you bounce the ball the most often throughout the course of the day. Some spots in your yard might be really popular, and that's what you're going to call the point of control. The volume profile is a little bit different. It's more like counting how many bounces happened at each spot, not just how long you spent there. So both of these charts can kind of help you see where the most action takes place and where it happened. And then by using those settings, you can see where most of the trading or the bounces happened of the stock on that particular day. Now we're going to get a little more into the nitty-gritty about how this could be used to help you. And so what I did was I took all of the blocks that you saw on the left previously and mapped them out as they played out across time, and you can start to see a little bit better about how those letters came to be and why they were stacked the way that they were. But this is going to help us, I think, visualize how to use this analysis. So as I said before, the market profile is focused on time. It's going to show where the market spent the most time at different price levels, which is going to help you identify areas of interest for support and resistance. Market profiles can also help in recognizing whether the market is in balance. So trading within a narrow range, forming bell-shaped curves or imbalances, which we'll get to in a couple of minutes. This information can be crucial for determining if the market is likely to continue or revert to a mean. In auction theory, market profile is kind of based on the auction market theory, which suggests that markets are constantly in a state of auction between the buyers and the sellers, and this tool helps traders understand where that market participation see value. And so it becomes a big part of auction theory, which you may have heard. I've seen it on Twitter. I've seen it in a couple of Discords. Yes, I still call it Twitter. Determining a market bias. So you can kind of examine this and see where the market is spent most of the time, especially when you look back over the course of a couple of days. That's really where I think you can see, like, hey, it spent a lot of time in this block today, and then yesterday it also did. And because of that, I think you're going to see that you can start to build areas where you think, okay, this has a good chance of maybe settling in a particular area just due to it being explored several different times, and if the volume's high enough. For intraday trading, which I don't recommend, especially unless you're experienced, traders use market profile to spot, key levels. Again, we talked in the previous screen about that point of control, the value area low, but that'll help with those entry and exit points. I wanted to show you a fully separated out volume profile. There are many different styles of these across different programs and platforms, but what they're all going to try to do, this is a much more straightforward concept to understand than the TPOs, is that it shows the volume of trades executed at each price level over a specific period. And you can see here, I just happen to have mine shaded with these different colors. What this shows is ups and downs, as well as the total volume. So what this allows you to do is to visualize what we talked about before, a couple of different things. First is the value area. So between these yellow lines, we know that most of the day's activity has taken place. We can see what was below, and believe it or not, I know it's a little hard to see on the screen, but there is something there on the right, or up above here on the left. And we want to pay attention to a couple of different things. So if I'm looking for where the buying and selling occurs, I'm looking at the total volume. So I'm looking at this area here sticks out, this area here sticks out, this area here sticks out, and this area down here kind of sticks out. So I'm going to already kind of know intuitively, and some people like to put this on the right hand side so that the prices are visualized right next to where the ticker is at that moment in time. But these are going to kind of act like areas of magnets or importance. There's a good chance that we go into those. The other thing that I want to do is I want to see maybe where the heavy buying was. So in just sort of visualizing that, I've got 3 points. Looks like I've got here, and I've got here. So that might tell me that this is a good place to buy near the low. And of course, the opposite would be true. Might be a good place to sell up here. But if you start to see this shift over time, like, you want to make sure that you understand that we can go above these value areas. And we frequently do at some point during the day, at least a percentage of the trades, just by definition. If we're focused on 70%, that means we got the other 30% are going to exist outside of here. So we're going to talk later about how to do that, but you need to determine if it's going to be something that's a breakout or a failure that's going to hold for the day and shift the dynamics. Some of these volume profiles have a setting called developing areas. And what the developing areas are going to do is kind of help you see how things are shifting throughout the day. So we're looking at a static image. So this is really easy to identify where some of those areas are. It's not quite as easy live because it's constantly updating throughout the day, especially if you're moving on a highly liquid ticker that you're on a much lower time frame. You're definitely going to see this move a lot faster. So you have to bear in mind that this is a little bit easier to do the analysis when we're looking at a static image than what you might see live. Okay, so now we're going to add another layer. There are indicators that are out there, and hat tip to Luxalgo on TradingView, who created this one, that help us spot volume nodes. What those nodes are, there can be high volume nodes and there can be low volume nodes. There can be cluster volume nodes. What a node is where there's either, as it sounds, activity that is low or high or clustered. And all of these have slightly different settings. And so this takes a little bit of time. As you can see, there's a lot going on here. What does this do? This tends to work well for swing traders, scalpers, people who want to see points of attraction, support, and resistance. This can quickly kind of give you an idea of where there's a small amount of action. Sometimes nature abhors a vacuum, and so we can see things get sucked into the low volume nodes. High volume nodes are a place where there's a lot of liquidity taking place. And then you still get a point of control. You still get a value area that is in here, and that's what some of these different colors are. So what I tried to do here is the purple line is going to tell us where the top is at. This red line down here is going to tell us where the bottom is at. This yellow line here is going to tell us where the point of control is. And then the rest of this is going to be, again, some of those low or high volume nodes. So we were talking earlier in the previous video about how these curves start to shape. And so here's two examples where I was telling you it looked like there was a lot of action, and sure enough, that's where these green lines roughly are. And this red line you can see here is a much lower profile, and because of that, it's a low volume node. So when we watch as we go throughout the day, that lets me know that we've got different areas of support and resistance to bounce within. And you can see that these lines end up playing out as areas that we're going to bounce around. So combining the volume nodes with a volume profile lets you know the rough structure of how volume and price are interacting together during that session. So the last thing I wanted to do was turn off the volume profile just so you could see the nodes. And if we go through here, I didn't want to take the time to mock up where these different circles are, but you can see how these levels frequently interact and play out throughout the day. And now all of this looks very easy in a static image because we're looking at this in the rear view. Again, keep in mind the volume nodes and the volume profile develop throughout the course of the day. And just because these lines are here right now does not mean that that's where those lines are going to stay. If it was as easy as seeing all of this stuff in advance, we would all know exactly where to place our swing trades. But it's not, and so because of that, you have to understand what they represent, not where they are, and what you want to do when you approach those levels as they begin to show up on your screen or as they've been established throughout the day. And so just a hint of caution there to anyone who might be looking at this and thinking, boy, this looks easy, all of these things line up. It's not quite as easy in real time, and hopefully we'll get in another video where we'll focus solely on this one live, and then you can kind of get an idea of how this plays out throughout the course of a day. So keep your eyes peeled for that one in the future. One more moment here to put this all together. So now we've overlaid all three. We've got a TPO, we've got a volume profile, we've got volume nodes. What does it all mean? How do we use it? So the TPO, again, is going to show you where the market spent the most time. It's not on the screen, but it does actually also have a point of control and a value area. The volume profile is going to focus on where the actual trading volume has taken place, and so the point of control in the volume profile is going to show the price level with the highest trading volume, which may also act as support and resistance or a pivot point. By comparing this with the TPO point of control, you can confirm or mentally challenge yourself about the significance of that level. So seeing here on this particular image with the white block being the point of control and the yellow block being the point of control on the volume node, and then this little yellow line being the point of control on the volume profile, they're all relatively close to each other. But if we really wanted to zoom in on a smaller time frame, then I have this set to a 5-minute time frame. There's a little bit of a discrepancy here, so you can learn. I'm not going to show you how to do this, but you can kind of learn to see whether that really is the point of control or not, and that can be useful. And the low and high volume nodes are specific areas on the volume profile where trading volume is either significantly higher or lower, and so those correspond to strong areas of interest which act as support or resistance. If it's a low volume node, that's probably going to suggest areas where the price could move quickly past that or offer very little resistance, sort of the hot potato theory. That's also how single prints can form, which is another video that I put together with my key levels that talked about why single prints are important. But essentially, if it's a place where you've got a hot potato and people are just passing it around, these single prints will start to form on these TPO charts. And those are areas that offer very little resistance, but they do tend to get re-explored at some point in the future, so they are important. So if you haven't seen that in the previous video about my key levels, go find out what those single prints are. So putting it all together, how do we use it? Well, first of all, confluence, right? So when the point of control from the TPO, the volume profile, and the volume nodes all strongly align, it strongly suggests that the market has found a consensus around that price level. And this can be a highly reliable level for setting entries, exits, or stops. You can also use all of this together to help find rejection and acceptance. So volume low nodes often indicate price rejection, as the market didn't find much interest in working at those levels, leading to a lower trading volume. Conversely, a high volume node indicates price acceptance. TPOs can show you the amount of time that was then spent at those levels, in addition to the amount of volume. So especially if you're seeing a lot of time being spent there, you're seeing a lot of levels being spent there, or volume being spent there, then you know it's an important level. It can help you with trend continuation or reversal. If the market's trending, the TPO might show a little bit of a shift in the point of control over time, indicating that there's a trend change, especially if it doesn't line up with the volume profile. So if the volume profile also shows increasing or decreasing volume at those higher levels, it's going to confirm whether a trend might be likely to continue or reverse, which is important. It's going to help more with precision on your entries and exits. So by using the TPO volume profile together, you can kind of pinpoint exact levels where price might react. This is going to help you with stop losses. Volume low nodes often serve as a natural place to set a stop loss on an order, because if the price breaks through those low volume areas, it may move on quickly to the next level of support or resistance. Similarly, volume high nodes and points of control from both profiles can serve as targets for taking profits. And then, after you get some experience, learning to avoid traps. Sometimes the price levels might appear important on a traditional price chart, especially for the people who like to draw lines, but they may not have very strong volume or time support. And so by cross-referencing, if there's actually been a lot of exploration at those levels, let you know if those lines are actually really important. And just kind of just gives you a way to contextualize the market moves. So it's more about understanding kind of what the market psychology is. And this gives us a little bit of insight into the market structure and psychological levels where the buyers and sellers are active. So you can sort of imagine it like you're building a sandcastle on a beach. The TPO market profile is like measuring how much time you've spent building at different spots on the beach. The volume profile is like counting how much of the sand you've used at each spot, or we can go back to the bouncing the ball, how much time you've spent bouncing in different spots versus the number of bounces in those spots. Sometimes you lose a lot of sand, sometimes very little. And now what those nodes represent it's like finding the spots where either lots of other kids also were building with you or other kids were not building with you. If you find those spots where you spent a lot of time, used a lot of sands, and other kids are building there too, it's probably the best place to focus on. So putting that all together, that's how we can paint a picture of what the structure looks like for the day. Okay, everybody, that wraps up our volume market profiles and nodes. I hope you learned something today. I hope you can put it to good use. I hope you feel a little bit smarter about how to read the market and what's going on with volume and price. And as always, good luck.